We asked ChatGPT about its opinion on Fed cut later this month. Let's listen to ChatGPT's prediction on that matter. On September 17th, 18 Federal Reserve Bank is going to decide whether to cut the interest rate or not. How possible is this? What's the probability of cutting?
The Federal Reserve's upcoming meeting on September 17 to 18, 2024, has generated significant speculation about a possible interest rate cut. As of now, market sentiment leans heavily toward a reduction. Futures markets and traders on platforms like Polymarket indicate a high likelihood, around 70 to 77%, of a 25 basis point rate cut, with a smaller chance, approximately 21%, of a more aggressive 50 basis point cut. Only about 3% believe rates will remain unchanged. This speculation is driven by factors such as moderating inflation and a softening job market, which suggests that the Fed may shift towards supporting economic growth by easing rates. Additionally, current high interest rates have raised concerns about their impact on the broader economy, including sectors like banking and housing. The Fed is closely watching inflation and other economic indicators, but expectations are increasingly pointing toward the beginning of a rate-cutting cycle.
Do you think if the 50 basis point cut comes out, it's a sign that Fed is seeing something that we don't see, such as recession, or it's purely because of a cooling inflation?
If the Federal Reserve opts for a 50 basis point rate cut, it could indeed signal more than just cooling inflation. While moderating inflation is a key factor driving expectations of a rate cut, a larger cut, like 50 basis points, may suggest the Fed is concerned about broader economic risks that might not be fully apparent to the public. Here are the potential reasons. Recession fears. A 50 basis point cut could indicate that the Fed is seeing early signs of a potential recession, such as a significant slowdown in economic growth, tightening credit conditions, or weakening job markets. Historically, larger than expected cuts have sometimes been a preemptive measure to prevent or mitigate a recession. If the Fed is worried about deeper economic issues, such as declining business investment or consumer spending, this larger cut might signal an effort to stabilize the economy. Financial stability concerns. Another possibility is that the Fed sees financial market instability, perhaps stresses in the banking sector, real estate market, or credit markets. Persistent high rates can exacerbate these vulnerabilities, and a larger cut would aim to reduce such risks. Global economic factors. Geopolitical risks or economic troubles abroad could also be influencing the Fed's decision. If the global economy shows signs of contraction, the U.S. could face spillover effects, prompting the Fed to act more aggressively. In contrast, if inflation alone is cooling, the Fed may feel more comfortable with a smaller cut, 25 basis points, to maintain a balance between easing economic pressures and controlling inflation. Therefore, a 50 basis point cut would likely reflect deeper concerns beyond inflation, possibly indicating that the Fed is seeing signals of economic weakness that warrant more significant intervention.
Do you think this rate cut at this time of the year is there to serve Kamala Harris' campaign?
It's unlikely that a Federal Reserve interest rate cut would be directly aimed at influencing Kamala Harris's campaign or any other political agenda. The Federal Reserve operates independently from the political branches of government, including the executive branch, and its decisions are primarily driven by economic data and objectives like price stability and full employment. The Fed's actions are aimed at maintaining economic stability rather than serving political interests. That said, the timing of rate cuts can have political implications, especially in an election season. Lower interest rates tend to stimulate economic activity by reducing borrowing costs, which can boost consumer spending and business investment. This, in turn, could create more favorable economic conditions for the incumbent party's campaign. If the economy is doing well, it may bolster the political standing of the administration associated with that prosperity, which could benefit candidates like Kamala Harris. However, there is no direct evidence to suggest that the Fed's decisions are made with political motivations. The Fed's focus on inflation, employment data, and financial stability remains the primary driver of its policy decisions, regardless of the political calendar.
What would be the impact of 25 basis point cut on S&P 500, treasuries, bonds, gold, and Bitcoin?
A 25 basis point rate cut by the Federal Reserve would likely have varying impacts across different asset classes. Here's an analysis of how it might affect the S&P 500, treasuries, bonds, gold, and Bitcoin. 1. S&P 500 equities. Positive impact. A rate cut generally reduces borrowing costs, which can spur corporate investment, consumer spending, and overall economic growth. This tends to boost stock market performance. Lower rates also make equities more attractive relative to fixed income investments like bonds. Investor sentiment. Markets typically react favorably to rate cuts, as they signal that the Fed is supporting growth. However, if the cut is perceived as a response to economic weakness, the positive reaction could be muted. 2. Treasuries, government bonds, lower yields. Treasury yields tend to fall when the Fed cuts rates, as bond prices and interest rates are inversely related. A 25 basis point cut would likely push yields lower across the curve, especially for short-term treasuries, as investors anticipate easier monetary conditions. Demand increase. Lower rates increase demand for treasuries as a safer, stable return, especially if equity markets become more volatile. 3. Corporate bonds. Lower yields, higher prices. Similar to treasuries, bond yields would likely decrease and prices would rise. For corporate bonds, lower borrowing costs could lead to refinancing at more favorable rates, improving credit conditions for companies. Riskier bonds. High-yield bonds, junk bonds, might see an even greater impact, as lower rates reduce the risk of defaults, making them more attractive. 4. Gold. Positive for gold. Lower interest rates reduce the opportunity cost of holding non-yielding assets like gold. This tends to make gold more attractive as a store of value and hedge against economic instability or inflation. Weaker dollar. A rate cut often leads to a weaker dollar, which further boosts gold prices, as gold is priced in USD and becomes cheaper for international buyers. Number 5. Bitcoin. Mixed impact. Bitcoin as a digital asset could benefit from a rate cut if investors seek alternative assets due to lower yields on traditional investments. A weaker dollar could also increase demand for Bitcoin, as it is seen by some as a hedge against currency debasement. Volatility. However, Bitcoin is highly speculative, and its reaction to macroeconomic changes is less predictable than traditional assets. Some investors might treat Bitcoin as a risk asset, so its price could rise if the rate cut boosts overall market sentiment. Overall summary. Equities, S&P 500, would likely rise as the rate cut stimulates economic activity. Treasuries and corporate bonds would see yields fall and prices rise. Gold would likely benefit from lower rates and a weaker dollar. Bitcoin could experience an uptick as investors search for yield and alternative stores of value, but its response could vary due to market sentiment. While each asset class reacts differently, the overall theme of lower interest rates tends to encourage risk-taking and asset price appreciation, with gold and Bitcoin potentially serving as hedges against inflation or currency debasement.
And for 50 basis point cut?
50 basis point cut would have a stronger and more profound impact across asset classes than a 25 basis point cut. Here's how it could affect the S&P 500, treasuries, bonds, gold, and Bitcoin. 1. S&P 500 equities. Significant positive impact. A 50 basis point cut would signal a more aggressive stance by the Fed to stimulate economic growth, which could boost corporate earnings and encourage investors to move into riskier assets like stocks. This could lead to a strong rally in the S&P 500, particularly in sectors sensitive to interest rates like tech and real estate. Risk of overreaction. If the rate cut is interpreted as a response to worsening economic conditions, e.g., recession fears, the initial positive response might be tempered by concerns over long-term growth. Number 2, treasuries. Lower yields, higher bond prices. A 50 basis point cut would likely lead to a steeper decline in yields, particularly on short-term treasuries, as the Fed pushes down interest rates more aggressively. Long-term treasuries might also see lower yields, although the curve could steepen if investors expect economic improvement down the line. Flight to safety. If the large cut is seen as a response to a potential economic downturn, demand for treasuries could increase as investors seek safety, pushing yields even lower. 3. Corporate bonds. Corporate bond yields, especially for investment-grade bonds, would decline significantly leading to a surge in bond prices. Lower borrowing costs could benefit corporations, allowing them to refinance debt at more favorable rates. Improvement for high-yield, junk, bonds. Riskier high-yield bonds could see a sharper improvement as lower interest rates reduce default risks. Investors might turn to these bonds for better returns in a low-rate environment. 4. Gold. Strong positive impact. A 50 basis point cut would make gold even more attractive, as it further reduces the opportunity cost of holding a non-yielding asset. Additionally, a larger rate cut might weaken the US dollar significantly, driving up gold prices, which tend to benefit from a weaker dollar. Inflation hedge. If the Fed's aggressive rate cut sparks concerns about inflationary pressures in the future, gold could gain even more as it is viewed as a hedge against inflation. 5. Bitcoin. Potential sharp rise. Bitcoin could benefit from a 50 basis point cut as investors look for alternatives to traditional assets. Lower interest rates and a potentially weaker US dollar could make Bitcoin more attractive as a hedge against fiat currency devaluation. Volatility. As with any sharp monetary policy change, Bitcoin might experience significant volatility. Some see Bitcoin as a risk asset, so it might rise if investors believe the cut will fuel asset appreciation across markets. Summary. S&P 500 would likely see a stronger positive reaction compared to a 25 basis point cut, but the risk is that such a large cut could be interpreted as a response to serious economic trouble, leading to mixed sentiment. Treasuries would see lower yields, with short-term yields falling sharply, and long-term bonds possibly reflecting expectations of future economic growth. Corporate bonds, particularly junk bonds, would benefit as lower rates reduce default risks and improve corporate credit conditions. Gold would likely experience a sharp rise as both a hedge against inflation and in response to a weaker dollar. Bitcoin could see significant gains, particularly if the Fed's aggressive stance causes concern about the value of fiat currencies or further stimulates risk-taking. A larger cut would amplify the same effects seen in a 25 basis point cut, but could also signal deeper economic concerns that might temper some of the optimism in riskier markets.
That's it, guys. Let us know what other predictions you want to hear from ChatGPT. Hope you liked this one. Don't forget to like and subscribe. Market news short and sweet.